Hey guys, what's going on? I'm going to take another look at Stellar Lumens. Ticker for this is XLM, and I'm currently on the weekly time frame. Before we get into it, a couple things. Number one, if you're not subscribed and you want to get notified when I release these videos, I do about 2 or 3 videos every day. I'm kind of behind that today, but I got a bit lazy. But normally, 2 or 3 videos is what I put out. So if you want to get notified when I release them, just click subscribe, click the bell, and then click on all. If you don't do that and you click away, you may have a hard time finding the channel again in the future just because it's relatively new, only around 1,000 subscribers or so. And because of that, I'm not really prioritizing the search algorithm. Also, if you want to place to trade XLM and pretty much any of the other coins that I talk about on this channel, I put a link to the exchange that I'm currently using in both the pinned comment and the description. Also, depending on your location, you may need a VPN to access it. So I put a link to a promotion on a VPN as well. Okay, so just to recap on Stellar Lumens, I'll kind of look at the weekly time frame first, give you a macro overview about the big picture, and then I'll zoom into the smaller time frames, and we'll take a look at the recent price action. Okay, so as you can see, I mean, we had this massive bull run. We went from 2 cents all the way up to about almost 80 cents. So huge run up here. Slow, painful pullback for anyone who didn't sell up here, right? If you bought up here, or if you bought down here, wrote it up, and then you held on to this long retracement level, this multi-year retracement, probably not that great of a feeling. So once again, guys, in the next bull market, in the next alt season, make sure to be taking profits on the altcoins, because this is pretty much the fate of most of them, right? You're going to give back over 90% of the gains that you had. Okay, so in this retracement, we formed it's just called a falling wedge. And this is typically a bullish reversal pattern, and that's pretty much what happened. Normally, they break out to the upside once they reach a convergence point, like you have this lower line of support, this upper line of resistance. As they converge down here, the price will pick a direction, and more often than not, this will break to the upside, which it did. But when the price will break to the upside from a falling wedge, more often than not, the price will come back down and retest the previous level of resistance and see if it will hold as a support level. So if I zoom in here, that's exactly what happened. We came up, it retested this former level of resistance as support, which held for about 2 months right here. And then from there, we had an impulsive move to the upside. Big pullback. I think around here, Bitcoin probably crashed and ruined the party. And then more recently, the price came back up to this previous high, this previous rejection point. And from there, bit of a sell-off, but we were able to break above it. Now, if you look back at these 2 rejection points right here, this was a level of resistance that the price broke. And as I just mentioned over here, when you break a level of resistance, more often than not, it will come back and retest it as a support level. And that's what the price did. We came back, and you see right here, a lot of buyers stepped up. They had their orders placed here. And that's why this candle has such a long wick, okay? This was a lot of buyers that stepped in right here to defend this level. They bought the previous resistance, and so far, this is held as a support. And actually, now that I look about where this candle body closed, okay, so the way I have this horizontal line drawn right now, this body closed below it, but actually, I consider this as a little bit of a range. So you see, this horizontal line is drawn based on the candle body low right here, okay? But instead, if I was to place a horizontal support line right here at the top of these 2 candle bodies, here, let's do that and see if this will make some sense. So I'd also like to put a line right there, a horizontal line. And then, yeah, when I zoom out, you'll see that actually this level was defended, okay? So consider this a range, and the buyer stepped in and defended this candle. So this horizontal level of support held. You see how the candle body closed above it? Unfortunately, the next week, we came below it, right? So the current range is this low, this previous level of resistance. This is the support level. And right here, this horizontal line is the resistance range, okay? So I'm going to zoom back out, and you see how we came up this impulsive move when we got rejected right here. So why did we get rejected right here? Why did we have such a turnaround? Well, when you have a breakout from a long-term retracement, what you can do to figure out potential levels of resistance and potential targets to the upside is take a Fibonacci tool and run it from the swing high down to the swing low, and that will give you these projection levels, right? And the first one of these Fibonacci levels that acts as a significant level of resistance will be the 3A2. So you see, that's exactly where we got rejected from, okay? This 38.2 retracement, which also kind of lines up with this low right here. Okay, so we got rejected. So this is normal. I know if you either bought up here or you bought down here and you are still holding this retracement, this was from almost 20 cents down to 10 cents. So this is a 50% drop. And as you're holding a coin, it feels quite frustrating, right? But when you zoom out on the weekly time frame, this is just how the price moves, okay? So this is likely the low. I can't say anything for sure, but I think this is the low. And we've broken out of a long-term, multi-year bullish structure. We retested it. And now this is the key thing. So we're making higher lows and higher highs now, right? So essentially what we've done here is the trend is changing, okay? So before we would make lower highs and lower lows, but look what's happening here. We have a low, then we have a higher low, now we have a higher low, and the same thing with the highs, a high, a higher high, a higher high. So now we are in an uptrend. Okay, this is an uptrend, and this is just how the price moves. It moves in waves. So you're going to break out of here, come up to the resistance, get rejected, come back down to the support that you just broke. So from here, assuming the pattern holds up, I would look to make a higher high and a higher low on the next one, right? So the higher high target from here, from where we are, is going to be the next level, the 50% Fibonacci retracement level, which also lines up perfectly with this previous rejection point right here. So this right here, this 50% retracement is going to be my next midterm target, and that's around 23 cents. So that's a very big gain from where we are right now with 12 cents, right? This is almost a 100% move, okay? But the price is not going to end up here tomorrow. So for the short term, here's what I'm expecting. So if I zoom in, this is the range that I'm working with. The current range is about 10.74, so 0.1074, a little bit over 10 cents to, I would say, about 13 cents. So 10 to 13 cents is the current range, okay? Because this horizontal line is the local level of resistance. So the way I would personally play this, entering a trade right here under this resistance wouldn't be my play. But theoretically, if I did that, if I entered at the current price, I would have to place my stop loss below this previous level of resistance, which is now our support, at around, as I mentioned, just over 10 cents. And I would place my stop loss just below this wick, okay? This potential trade setup would give me a risk-reward ratio of 1 to 2.75. So that's pretty good. I would have to risk 15%, not really ideal, to potentially get a little over 41% to the upside. Now this trade starts looking a lot better if the price comes back down and retests this previous resistance level as support one more time. If that's the case, then I would enter around here and the stop loss would stay in the same place. And in this trade, I would risk only 5%, by 5.25%, to get a potential 57% to the upside if it comes back up to that 382. That gives me a risk-reward ratio of almost 1 to 11. So this would be a great opportunity if Bitcoin comes down. And I'm going to show you something about Bitcoin right now, actually. So I mentioned this before, but Bitcoin has a large liquidation level at around, I would say, between 24,500 and 23,500 right down here. This is a massive liquidity pool. So if there's big money that wanted to get in, this is where I think they would probably take the price to, just knock the price down a bit. And this level right here is where a lot of traders that are using leverage are going to get liquidated, which essentially just means that they're going to be forced to sell onto the market. So if you're a big player that wants to build a position, right? Because, the normal guy that just wants to get a few $1,000s in here and there, they don't move the market, right? The ones that are really moving the market are the guys that have hundreds of millions of dollars, and they have a unique problem where they cannot just market buy. Because if they just market buy, the price is going to spike up as they're trying to accumulate, right? So they have to hunt for these regions on the chart that have a lot of liquidity. So if they're able to bring the price down here, all these traders on leverage are going to have to sell, and then they can buy into this position. They can load their bags, and from there they can push it back up. So we do have this target down here that is making me think that the price may find its way back down to retest this level one more time. But of course, nothing's for certain. But if the price does come down here and it looks like this level is going to hold, I may personally look to that as an entry point, and then I would target this 382 retracement. Actually, the way I would play this is my first target would be right here, where we are right now, this first level of resistance, this horizontal line at around the top of the range at around 13 cents, okay? So this setup here, which is extremely conservative, would give me a risk-reward ratio of 1 to 3. So that in itself is pretty good. I would risk a little over 5% to get almost 16% to the upside. Now, if this level held, and as the price came up, what I would likely do is I would move my stop loss up, right? I would trail my stop and then I would increase my target. So if the price was looking strong, I would increase my target up to this 382, which was the previous rejection point. And then as the price comes up, I'll just follow my stop. I'll click and drag my stop loss up and periodically move it higher and higher. Therefore, if the price comes back, I get stopped out in profit. It's not a big deal. Now, if this 38.2 level breaks, okay, and we close a weekly candle above it, my next target, as I mentioned, is going to be this 50% retracement at around almost 24 cents. So 23.02381 will be my next target. And again, I showed you how I got that target by taking a Fibonacci, running it from the swing high to the swing low, and then looking for confluence in the price action, right? So this to me is a pretty obvious target. But in the meantime, Bitcoin has that liquidation level at around 23.5. So I'm a little bit cautious about getting into a large position where we are right now. Ideally, if I'm going to enter XLM, I'd like to enter closer to this range right here. But anyway, we'll see what happens. That's just personally how I'm going to play it. If it breaks this 13-cent region and close a weekly candle above, then I'll use this level here as my backstop, and I'll target the 382. If the 382 level breaks, I'll use the 382 as my backstop with a stop loss just below it, and then I'll target the 50. So that's how I'm going to play it. Or likewise, if the price comes to the 382 and I start noticing maybe some bearish divergence or some bearish candle formations, then I may look to enter a short and place my stop above here. And then, of course, my take profit on that short would likely be probably around right here. Anyway, that's just an updated summary on Stellar XLM. If you found it helpful, smash the like button and subscribe and click the bell and then click on all if you actually want to get notified when I release new videos. And once again, if you want an exchange to use, I link to the one I'm using in the pinned comment and the description. All right, guys, take care. Have a good evening. Bye.